How we doing, friends and degens? It's good to be back. Hope everyone's doing well. So, all right, let's get to it. Had a real interesting week with everything we got going on in crypto. I've been keeping myself busy outside of crypto. I've been doing some replacement of some siding, some painting outdoors. Nothing quite like being up on a 30-foot ladder. It's a good time. I highly encourage you all to try it very, very safely, of course, with those extension ladders. Anyway, let's see who we got rolling through the chat tonight. My brother from another mother. Hey, Boogie, good to see you, man. For the gang out there, for friends and family, friends and degens, I believe it is a kimchi and tacos stream tomorrow night over on Boogie's channel. We got to firm up that time. I'm guessing it'll be about 9 Eastern, 8 Central. That's when we typically like to throw it live. And we got Jack Simple. Hey, what's going on, Jack? Christian. And the ascending man himself, Nate, coming through. One of these days, man, I'm actually trying to get backing tracks like drums and bass and stuff patched in. But the stuff you guys hear is not the stuff that necessarily I hear locally. And so sometimes those audio tracks are desynchronized. So it sounds like here I'm playing in time, but when I listen to the playback on stream, it's like, I don't know, a half second off, and it drives me nuts. And so I haven't figured out where that problem's occurring, if it's like a StreamYard thing, if it's an ISP thing, or if it's a MyPC thing. I got to do some more troubleshooting on that, but thanks, man. I appreciate the support. Christian, no, typically Boogie and I are about an hour before Moon Gang. We like to basically give the community, let's say a full night of programming when he and I have the mutual availabilities. And we got Fallout Zone. What's good, man? Appreciate everyone coming through. So, okay, let's get down to a few topics I wanted to discuss this evening. I've been trying to make some back-end updates and the like, but let me see if this rolls. I think I got one of my audio gremlins figured out. As far as sharing some different content and the like, trying to get some audio rolling on this. So hopefully everyone will be able to hear this okay. Let me bring up Dr. E.J. Anthony over here. We saw a lot of liquidations. Let's see, today is Saturday the 8th. So late this week, we saw a number of liquidations on the crypto market. Different things driving that. Obviously, there's the whole Roaring Kitty GME story and like. I think Saudi Arabia also announced that they will be ending some of the arrangements they have for oil in U.S. dollars. I haven't been able to hard confirm that story. I did see some statements and claims floating around on Twitter. And of course, if you read it on Twitter, it obviously must be true. But, in general, crypto Twitter, pretty on the money a lot of times. Anyway, one of the things that came out was the jobs report, but I think a number of us, certainly here in the U.S., have long thought, hey, in many ways, the government tends to cook the numbers. And so to what extent this stuff was true, well, I'm going to let Dr. Anthony over here speak to it a bit more.
Quite a strong report here, even on that side, even with some of the weakness showing there.
Yeah, EJ, your thoughts?
Well, the reason the unemployment rate is so low is because there's over 5 million missing workers who don't have a job but aren't being counted as unemployed. That's according to BLS's own figures. And the weakness that we're seeing in the household survey began a couple of years ago, and that has continued to now. And we see this massive divergence between the two surveys, the survey of businesses and the survey of households. A lot of that has to do with people taking multiple jobs, but it also seems like there's something seriously wrong with the BLS's birth-death model, which continues to add jobs, which frankly aren't there. You can look at the quarterly census, for example, and you can see that last year, about a quarter of all the jobs we thought were added never existed. And now estimates from Bloomberg, as well as the Philadelphia Federal Reserve Bank, confirm that.
Are you questioning the strength of the economy overall, then?
The labor market especially, absolutely. If you believe the JOLTS numbers, which, there's some reason whether or not you should, because the response rate to that particular survey is so low. But JOLTS show that hiring has slowed significantly. It has been on a downward trend for a couple of years now. It is below the pre-pandemic trend. So there definitely does seem to be weakness in the labor market.
EJ, you're from the Heritage Foundation. Am I hearing right that you think there's cause for a rate cut?
No, not at all, because when you cut rates, you're going to increase inflationary pressures in the economy, and there is still too much inflation. A lot of that has to do with the fiscal side, however, because at this point, fiscal and monetary policy are essentially at loggerheads, but there's no reason right now why they should be cutting rates. Inflation needs to be brought down much lower than it is today.
So, all right, we got Dr. Anthony saying, hey, he does not foresee a rate cut based on current inflation. Obviously, he's way more educated and knows far more of the nuance on this particular topic than certainly I do. I know a number of us are looking for the next FOMC meeting, which I believe is actually coming up this week, midweek this week. I think it's either the 11th or 12th. So in this particular case, we got Dr. Anthony over here, or EJ, stating basically a lot of the jobs don't exist. There are huge discrepancies between different kinds of reporting. I think if you start poking around some other sources, you'll see increases in part-time jobs, millions of people leaving the labor market. And but let me finish EJ doing his thing up here with CNBC.
Okay, and what you see with this report tells you what about, does it change anything in terms of your opinion and what you're seeing, or you just don't believe the numbers necessarily?
Well, it's not that you can't believe the numbers, it's that the numbers are conflicting. And so it's a question of which data do you think is more accurate at this point? And I think there's a good reason why polling on the economy is not very good these days. It's because it does not reflect the quote-unquote official headline numbers. And as soon as you delve a little bit deeper than the headline numbers in this report, you begin to notice discrepancies, like the fact that the household survey has lagged severely behind the establishment survey. They both can't be true.
Sarah, do you?
So very interesting report from EJ and CNBC. So I do recommend y'all give this guy a follow, Dr.
Quite
EJ
a
Antony.
strong report here.
Dr. EJ Antony, at real EJ Antony over on Twitter. You can, if you look at who I'm following, you can certainly find him over there. Else, let me just grab his Twitter handle. I think he's a great follow. One of my favorites on that one. Let me chuck him in chat. So, okay, talking a little bit about, you heard it directly from him. He's questioning some of these reports. I think many of us have had that experience as well. Outside of that, the inflation's still running hot. There were some questions about interest rate cuts. Certainly, we are seeing interest rate cuts in other areas of the world. But hey, let's take a look at a few other things here domestically. So one of my other favorite follows here on crypto Twitter, because I know Boogie and I have talked about this, and obviously, we got some TA wizardry on Boogie's side, and I tend to cover a lot of the FA and some of the on-chain stuff. I like to skim a lot through quickly through crypto Twitter and some of my favorite follows. And so, side note, be very, somewhat careful about who you curate on your Twitter list, because if you start going down different rabbit holes, have a dedicated crypto Twitter. I have a wholly separate personal Twitter account for all my non-crypto stuff. Otherwise, I find the algorithm can start polluting some of the stuff it's pushing out to you. Anyway, the U.S. debt is now bigger than the entire U.S. economy. It's been that way for a hot minute or two on this, but Game of Trades is another one of my favorite follows for this stuff. And in 2012, the debt surpassed the GDP for the first time, and it's only gotten worse. In fact, you can basically see overall, it's widening out here as far as federal debt relative to GDP. So, okay, inflation running hot, debt to GDP, both GDP and debt are climbing, but the issue is this gap is widening over time. So let me hit a pause button on that for a minute. I want you to keep some of these things in mind as we continue to look at a few other stories tonight. So before we get into some of those stories, I know one of the things that I picked up from the guys over in the crypto mindset community, and Charlie in particular, just taking a look routinely at the total market cap. We're floating at around 2.66, let's call it 2.67 trillion, give or take. BTC Dominance, according to CoinGecko, floating around 51.2%. And if we take a quick gander down here, crypto market cap at around 1.3 trill. I know for several months off and on in the run up to, let's say, June 8th here, Charlie had been saying, hey, under 1.2 trill Bitcoin, pretty fair, solid buy and the like. So we are basically past that point. We'll see if we got some stuff coming up on the horizon. So in the on the debt side of things, one of the things I wanted to also quickly reference here is if you look at it, and I don't have any handy graphs, but a lot of, I do Saturday morning is like one of my heavy crypto research days. I like to do a lot of reading. Basically, there's about $9.3 trillion of federal debt that's going to mature, I believe, over the next year or so, next 12 months, give or take. Like, I think it's over, next year or so. And that all has to be refinanced, and it's going to be refinanced at a higher rate. So we're talking, increases of like $4.7 trillion, I think, due for refinance. I need to really dig into those numbers on that. So basically, 1/3 of our debt right now will have a maturity date of less than 1 year to be refinanced at higher rates. Let's see here. Yeah, Nate. Let's swap some messages, man. I just saw your message there. Yeah, we'll swap some DMs and get something sorted. Thanks. Anyway, so about 1/3 of the debt has an outstanding maturity date of less than a year. So we basically got 1/3 of debt that's going to come due at a higher rate than it was initially financed at. If you look at some of the international news too, we're seeing all sorts treasuries and the like being dumped by foreign governments. As far as investors or buyers, we're going to demand certain aspects of higher yield rates and like our spending is effectively inflationary. I was talking to Boogie about this the other night. I think the death spiral has been in motion for a while. I think we're all just starting to realize how ugly and bad it is. Good Lord, I hope to be proven wrong on some of this stuff. But anyway, cruising right along. So we took a look at the total market cap. Next up, relative to that is, I just wanted to talk about some of the exchange data because while I think the stickiness of inflation, personally, I don't think it's going away. We're already starting to see some rate cuts, which I'll get to in a minute. There are some positive things going on. Well, I'll call them pseudo-positive. Let me get back to sharing this one out. And let's see here. Oh, wrong one. Let me do this. Oh, come on. Cool. As far as the total market cap, again, floating at 2.7. So a little bit of positive news, though. We got some other things moving around. Robinhood acquiring global crypto exchange Bitstamp. And so this one caught my attention earlier in the week. They're spending $200 million on Bitstamp over here. And so I know people have, let's say, some mixed feelings about Robinhood and maybe ways they have handled or managed things previously and halting trading. And I think there was that kid who suicided or self-deleted because the UI was slow to refresh, and he looked like he owed just this ludicrous amount of money after doing some assorted trades and leveraging up, and just the user interface hadn't reconciled. But a little bit of positive news here. So Bitstamp is one of the oldest exchanges, maybe even the oldest active exchange. I think they were founded in 2011 on that front. And look, hanging around in the crypto space for that long, just by force of will or business savvy or whatever else, is actually honestly pretty impressive. I've really been in this space since 2021, June 2021 or so. And certainly I've watched a lot of things come and go, even over the span of, basically it's been about 3 years for me now. Yeah, about 3 years this month. And just the rate of evolution and just watching things come and go have been really interesting. So anyway, coming back around to Bitstamp, my understanding, at least going back as far as 2021 and just doing my research here, is they've always been a fairly reputable exchange, but just haven't been able to break into that top echelon of top tier exchanges for whatever reasons. Maybe it's because some of the founders left or different business practices. Maybe it's because they're based in Europe. I'd have to defer to some of the folks who are really into Bitstamp and use that routinely. On the other side of the house, you got Robinhood dominantly based in the US. And so we know their competition for other exchanges and crypto type solutions have bigger presences around the world and certainly in Europe. So, eToro, Kraken, other orgs and the like. So from a business perspective, this makes a lot of sense for Robinhood to try to branch out further in the crypto space, especially in Europe, to try to onboard more users. Allegedly, Robinhood has about 50 million users, 4 million users. So at 200 mil, that's basically Robinhood spending $50 per customer. That's a pretty solid deal for them. So why do I think this is overall bullish for the market, aside from, let's say, Robinhood really trying to make finance and investing more accessible to a lot more people? They're going to integrate more crypto solutions into their main app around the world. They're going to onboard more retail users into their app around the world. So thus, crypto becomes more accessible to more people around the world. I see this as a net win in the grand scheme of things. So, yeah, I'd be curious to hear the chat's thoughts on that. Feel free to throw a few comments in as I'm kind of working through these different articles on this one. All right, let's get back to it. Oh, bloody hell. There we go. Cool. So next up is Canada. Canada was the first G7 country to cut interest rates, which I thought was very interesting on this front. So the Bank of Canada says they have more rates that they plan on cutting and will be data dependent and more gradual. Rate cuts will happen if inflation continues to ease. Does anyone here think inflation is continuing to ease? Because I really think they are just screwing around with the numbers personally. Maybe there's some fringe cases and places where people are seeing things come down. I don't see it. Or maybe inflation is coming down because technically inflation is the rate of change. So yeah, I'd say that might be somewhat correct now that I really sit down and think about it. Certainly costs are not going back down. Denominations are not going back down. That ship is set sail. That genie's out of the bottle. That toothpaste is out of the tube. Personal opinion on that one. So that's exactly what I'm thinking, Nate. Thank you, Canada. We got this comment from Nate here. Thank you, Canada, for being the first to put pressure on the Fed to print me more money. Yes, I agree. Dollar printers, money printers going brr very soon. Okay, so I just mentioned here Canada. And then elsewhere, there was this question here because will the UK and US cut interest rates like Europe? Oh, interesting. Thursday, the ECB, European Central Bank, also announced rate cuts from 4 to 3.75. They did this a day after Canada did such a move. And there's some reference here to other countries doing it, but look, who really cares about those countries? Well, maybe Mexico because they're so close to me, but the other ones, that might be leading indicators. Anyway, officials in the UK and US, where borrowing costs now stand at the highest rate in years, are expected to hold off any cuts at their meetings this month. So a lot of people saying, hey, we're not thinking any rate cuts for the US this month on that one. Again, FOMC meeting this coming week. Keep your eyes peeled on that one. I fully expect Jerome Powell to walk out there, say good morning, and we're just going to see a nice red candle or wick on the candle on that one. Anyway, so there's some chatter here about overall inflation targets and and central banks around the world managing rates and the like. In the Eurozone, the UK and US economies that had not experienced inflation issues for decades, the UK and US have been in a holding pattern, keeping rates at a decades high level. The decision from the ECB is a declaration of confidence that trends are moving in the right direction. I'm calling horseshit, quite frankly. They got some really nice low-looking numbers, 2.6, 2.3, a long way down from a peak of over 11% in 2022. The Fed, in the case of the U.S., the Fed's reserves preferred inflation gauge, PCE, personal consumption expenditures index, has dropped to 2.7. Okay, so we got the ECB, Canada cutting. Interestingly enough, Denmark cut too. Danish mortgages could be affected by this, and I believe they confirmed that they will be cutting on this one. So down here, the statement here is, although Denmark does not use the euro, ECB policy is relevant for Danish consumers because of Danish monetary policy, which states the exchange rate between the krone and the euro must be held at the same level. So, yeah. Fallout Zone saying, right, numbers are cooked, right? What's the old saying? Is that there are three kinds of lies, damn lies, and statistics. Yeah. So interesting, right? So, okay, now we've just highlighted several countries cutting some rates and the like on this one. So I think with respect to the global interest, let's say global interest rates in the sense of how interest rates are operating around the world, this to me indicates that more places are going to be stuck either with a stickier level or higher level of inflation. And honestly, there's a part of me that wonders here in the US if the Fed throws in the towel on like a 2% target and just says, hey, new target's going to be 3% or 4% or something like that. I don't think they will, at least not this year. It's an election year. but there's a part of me that's starting to wonder, not going to lie. So with this reduced interest rate aspect comes more consumers and customers more likely to move into risk on assets, like our favorite asset class, cryptocurrencies and blockchain-based tech on that front. So a few other quick sidebar notes here, because I know I've got, just based on some of the comments and messages I've gotten, I got some viewers who are maybe newer to the crypto space, and they're finding me through some different channels. I've actually got some guitar players reaching out to me, and like I picked up a few folks through some of the AI-related streams and like. So in this particular case, the Fed likes to use the personal consumption expenditures index. That's the PCE. Whereas I think most of us are going to kind of follow something more like the consumer price index. The PCE one, though, tracks consumer spending and prices based on typical business receipts to calculate gross domestic product. If you don't know what all that is, scribble it down, come back to it. Certainly, you'll find yourself, if you find yourself in the crypto space, you're going to learn way more about how finance works, both on a domestic level and a global level, than you ever knew before. So we don't typically like to use aspects of the same price index, I think, compared to like individuals versus the government. And even then, some of those are really contested, especially when it comes to food and energy prices, as some of those are more volatile. And some of those end up being messed with, like, oh, we're going to change this unit of measure, or we're just going to outright pull this from the corresponding calculation. So a lot of inflation numbers are complete garbage. But how can the changes in the interest rate affect inflation? Again, as those interest rates get cut, and we'll have to keep our eyes peeled for how stuff is moving outside the country. Typically, when you see rate cuts, then that usually translates into more money flowing into risk-on assets for some of those different things on that one. Quick side note, in some of my research, I read a statement, which I'd have to go back and really dig into this, but it seems fairly right to me. It certainly feels right. 182 of roughly 220, let's say, tracked countries in the world are in budgetary deficit. 182 out of 222, right? What does that work out like on the mathematications? Just pulling out a quick sidebar calculator because I stayed up too late watching one fighting championship, which was delightful. Mikey Musumeci, wow, that dude's scary. So like, yeah, roughly 82% of countries in the world are in budgetary deficits. Nice. Ponzi's everywhere. Like our friend of the channel and one of my mentors, Dollar Cost Crypto, is quite fond of saying everything's a Ponzi. So, all right, Nate, let's see. Nate saying likeliness of rate cuts were up to 70% for July. Man, I don't know. It's a rock and a hard place, right? Like they're screwed. What plays do they realistically have on this stuff? You know, like we've had debt that keeps coming due. Let's see here. Just glance through some of my quick side notes on this stuff. Yeah. So again, allegedly 182 of 222 countries in the world are in budgetary deficits. Let's see here. We know we've got a ton of debt coming due to be refinanced. I'm sure there's going to be a lot of calls from Yellen to Jerome and like saying, hey, we've got a third of our debt coming up. Those rates need to stay down. We can't refinance this at a higher rate. Or what? We're just going to print a bunch more dollars or... Yeah, I'd be real curious to know what Brendan thinks about this. That's definitely more his wheelhouse than mine. I just don't see it. So we've got that FOMC meeting. We'll see how stuff shapes up on that front. Let me kind of rip through a few more things we got going on just in the general crypto space. So let's see here. BitMEX founder Arthur Hayes. Side note, if you don't follow Arthur Hayes on Medium, highly recommend you do. He tends to put up some more detailed semi-technical writing, and when it comes to financial markets, again, he knows this stuff better than I do. I kind of smooth brain a little bit and say, okay, what is Arthur Hayes saying? That's going to be, one of my win checks on some stuff. But he's saying go long the Bitcoin as G7 central banks may slash rates. So he breaks it down further, talking about, again, Federal Reserve, Bank of Canada, Bank of England, ECB, and the like. So this just came out like 15, 20, maybe a half hour ago. So I haven't had the chance to really dive into it. But literally as I was scrapping some show notes together, it hit my deck. I think Hayes was very optimistically saying if shit goes haywire or crazy or money printers just go ballistic, like with a bazooka, maybe $1 million Bitcoin by end of this cycle. Here's a hilarious comment. It's the same effing game we've been playing since 2009 when our Lord and Savior Satoshi gave us the weapon to defeat the TradFi devil. Go long on Bitcoin and shitcoins. I'm iffy on Hayes because he thinks Bitcoin's going to hit over 500K this cycle. Multiple shows he said it. Yeah, I'm aware, right? But hey, that's if he's saying 500 and I was like 120 to 150, maybe 220, maybe that puts us at like a 200 to 300K Bitcoin. I won't be mad. I won't be mad about that one, Nate. Anyway, so okay, we got a little bit from Mr. Arthur Hayes here. Let me kind of flip over to a few things. So we've talked thus far about the debt. One of the things here that also came up, Game of Trades, one of my favorites. Yep, 240,000, Richard Hart, damn straight. And I can see that like on one of the trend lines too as a possibility. Inflation adjusted U.S. government spending since 2020. So keep in mind, we talked about we have a third of our debt coming due for refinancing at a higher rate. We saw that the debt to GDP delta, that gap between those two trend lines is widening over time. In this particular case, if you look at all the deficit spending, it is at this point, the overall spending exceeds the combined spending we had for World War I, World War II, and 2 decades here in the U.S. So this is crazy looking. Again, I don't see a way out of this. One of the arguments for Bitcoin, and let's say I think it doesn't have to be Bitcoin. Let's say a solid store of value type mechanism like Bitcoin. Maybe Ethereum, hopefully it's something like Hex in the future, who knows, or some combination thereof, is effectively those currencies or solutions are potentially solutions in which you, instead of denominating in the dollar or denominating in the euro, you're going to denominate in that cryptocurrency unit. And those are effectively hedges against currency debasement by being a harder form of money. Anyway, I want to call it the overall deficit as well as the insano debt type stuff. All right, a few other things here I wanted to talk about too. Again, crypto Twitter, man, when I'm on my lunch break or if I'm like waiting to get rung up at the farm stand, because I sometimes got to pick up soil and mulch and like other stuff for the property, I'll be like flipping through my crypto Twitter real quick. Shout out to Rect Capital, absolutely one of my favorite follows, just mimicking and trying to replicate some of the stuff Rect is seeing either in his YouTube videos or some of his charts has helped me with my charting and just getting way more familiar with TradingView. Check this out. He posted this in May 21. So this was about 3 weeks ago, saying we are here calling for a lowest hype cycle on altcoins by, in this case, Rec Capital, looking for a rough peak around July. Now we're going to see if that holds true. So out of curiosity, I pulled up my Bitcoin dominance chart and I took a look at some trend lines I had drawn previously. So this is like a 7-year trend line. Side note, one of the things I was talking about the other night with Boogie is like, I got to start labeling my trend lines because I don't remember sometimes when I draw this stuff. So when I go back to the chart, I'm like, did I draw that last week, 2 weeks ago, 10 weeks ago? I don't know. I don't necessarily remember. And for something like the Bitcoin dominance chart, it's a long-term trend line. So I'm not too worried about it in the grand scheme of things. But you can see progressively over time, the Bitcoin dominance has basically been cut in half, even under a best case scenario, right? Granted, 7 years, far more cryptocurrencies on the market, far more things to capture the capital moving around in the space. I also drew a separate trend line showing, in this case, the lower range of these percentages over time. So you can see we bounced here in 2023 and then kind of came back up. So now Bitcoin is kind of continues to, so Bitcoin goes, so too does most of the market. But it's interesting to see aspects of the overall dominance. You can see back in 2020, December 2020 down through 21, it basically cratered and then eventually wound back, grinding back up after we bottomed out on the market. And worked our way back. So what I thought was interesting here was kind of this stretch of space going from May, where was it? Here we go. This peak here, roughly October, November 21, which was peak of last cycle. So out of curiosity, everyone knows, I think at this point in time, I like to reference the others chart a lot. Again, what is my rationale for others? Factors out the top 10 cryptos by market cap. The one that's really interesting for me that gets factored out is ultimately Tether, in all honesty. So Bitcoin, Ethereum, Tether are the ones I argue basically for removing when I look at certain things. Not that I have anything against them inherently so much as Tether is tied to the printing of the US dollar. So my concern there is it might give me a slightly skewed perspective relative to arguably stable coins flowing around in the market. Whereas I'm personally more interested in the pure altcoins versus USDT. And that's just a personal argument on that. So I can try to get a better, again, pulse check or status check on some of the other things moving around in the market. So we can see over here, though, the others sort of peak up, let's see, right around that same time frame in this late 21 band here, kind of stayed up around there, grinds down to around, what's that, 75 bill, and that's working its way back up to like 264 bill as of today. So again, my argument for using others is just to kind of to spot check, and really personally, it's factoring out Tether is my personal rationale on that one. So we can see we're above this trend line I had drawn. I think I drew this about a month ago personally. Again, I got to start labeling these things so I can keep track of my trend lines, but we're clearly above that trend line. I think personally we'll see a little bit of a dip on that, but in this case, we got Rec Capital saying we're here looking for a peak in July. So we'll have to come back and check out how we're doing in about a month, let's say over the next 4 to 8 weeks on this stuff. All right, so one of the other things that came up in one of the comment threads over here in Rec's Twitter, because he was referencing himself from about a month ago, is Crypto Thanos here. Shout out to Crypto Thanos. Had a similar trend line, but it was on total market cap excluding BTC. Looks like he's printing some sort of consolidation or flag above it, which I believe is usually an early indicator for a potential breakout. We got Fallout Zone saying, hey, he's fine with some discounts if they come. Damn straight. I actually DCA'd a little bit this weekend. I was trying to, scrap together a few nickels. I had to go donate some sperm, plasma, blood, my best friend's kidneys. Had to make some things happen because I was trying to snap up some of that Phantom around low 70 cents just to DCA a little bit more this over the weekend. And, if Jerome causes a nice red candle this week, I'll buy some more midweek. It's tough, man. It's tough. So we got this kind of going on. And I said, okay, is it altcoin season currently? No, it's currently Bitcoin. And so Blockchain Center here has a nice altcoin season index. Let me throw this down on to the chat so you can check this out. And they're arguing it's Bitcoin season. So I said, okay, aside from me going back and maybe looking at something like Bitcoin dominance as a percentage and tying that to others chart, what are they doing to make a claim here that it is Bitcoin season versus altcoin season? And their metric is as it starts getting closer and closer to the 75 value, you're moving into an altcoin season. So they have this chart back here that goes back a ways and kind of where's the 75 threshold. Let me just kind of scroll down. So they said, okay, we kind of had a little bit of an alt season earlier this year. Okay, makes sense, especially right around the late January timeline as a bunch of money flowed into Bitcoin. They're saying there was a little bit of an altcoin season in late 22. I didn't personally play that much if there was. And then certainly through May 21, June, July, spiking up here again, October, November, a little bit of a late top in end of year 21, early 22, which was probably lower by absolute values, but relative to valuations and ratios across assets may have made sense for it to be deemed an altcoin season by their metric. So here down at the bottom, they tell you how they calculate this value. If 75% of the top 50 coins perform better than Bitcoin over the last season, which they're defining as 90 days, then it's an altcoin season. They also excluded from the top 50 stable coins such as Tether and DAI and asset-backed tokens like wrapped Bitcoin, staked ETH, and so on. So I ended up bookmarking this personally as one of the pages I'll be referencing in the future for just like some quick anecdotal glances and versus needing to crack open a chart. If I can get to this on mobile and just look at it in 2 seconds and be like, hey, kind of where we're at on it and just get a pulse check. Not that I don't necessarily want to do all my own homework, but sometimes you're just pressed for time, so you just want a quick status update, and you believe in how they calculate their values or the rationale or reasoning behind it, so you feel like they are ultimately trustworthy on that stuff. All right, so let's see. Oh, yeah, one more thing here I wanted to also tack on. Let me just do this one more time. Bybit seems to open up registration and authentication to Chinese users, according to this report. So crypto exchange Bybit appears to allow registration and authentication of users in China. China is not included in the list of excluded jurisdictions for Bybit services. Are certain rules and regs starting to relax? People in exchanges starting to get green lights for China? Do we have a potential set of rate cuts, money printing, moves to risk-on assets, and some rice paddy pumps coming this summer? So I think there's a compelling argument here for some altcoin pumpage in the summer. Again, we're all kind of speculating in the most speculative asset class there is. Let's see, if we look at the balance of evidence this evening, we take a look at where we're at. We got deficits, debts. Now, we don't know what the U.S. is going to do. We do know it's an election year. So we've got things like Canada cutting rates, Robinhood acquiring one of maybe even the oldest crypto exchange, certainly so they can expand their European reach. So Canada, the ECB, Denmark cutting. We've talked a little bit about the deficits on some of this stuff. We've got this altcoin cycle projected out here by Rec Capital, kind of peaking around July. We've got Bitcoin dominance. Okay, we're slightly above this 7-year trend line. What goes up must come down, right? In the background, we've also got the Bitcoin ETF with lots of inflows forthcoming. The ETH ETF has been approved, the S1 side of things. I'm very curious to see how the government toys with and potentially plays or stalls with some aspects of S1. I am not enough of a SEC person and filing person to really speak eloquently to that. I'm speculating the government would have some mechanism to delay if they so choose through assorted mechanisms. Let's see here. We got Trump saying, hey, I am the crypto president in so many words. I'm still very bullish on the market for TradFi money starting to, or I should really say continuing to flow in on that particular front. We look like we're printing a little bit of a breakout here on the crypto market cap, excluding BTC side of things. It's not altcoin season index yet, but really there's only one direction this can go. I'm thinking altcoin season pump coming up this year, maybe even for this summer, as some of these interest rates start getting cut and we potentially get an influx of Chinese above board Chinese users back into the market. So that's kind of the week in crypto for some of the stuff I was looking at. Thanks, everyone, for tuning in. I'm going to go have some more coffee and do a little bit more homework and research. You can catch me here on YouTube at Mr. Angry Twinkie. Follow me on Twitter. If you want to hit me up on Telegram, I'm at Mr. Angry Twinkie on Telegram. Let's see here. And you can catch me most likely on Boogie's channel tomorrow night around 9 p.m. Eastern is what I'm thinking for Kimchi and Tacos. Check out Boogie's Twitter. Check out my Twitter. I'm sure we'll be rebroadcasting and reposting it as the time comes up for that. So I appreciate everyone tuning in. Thanks. Stay safe out there. Go buy some more crypto.